So the markets have closed into weakness again, showed weakness at the close. Bitcoin and cryptocurrencies are following suit. So let's talk about what happened today with Bitcoin and the markets. We'll take a look at Bitcoin first and foremost. So we can see where we're at here. We had a bit of a sell-off here overnight into today. We're still continuing with that sell-off. This is the daily chart. If we look into the hourly, we're kind of bouncing around here into the hourly after the first initial drop. And that was a healthy little drop. We had this little pump here at the end of the day yesterday. This was about 10 o'clock last night. We started pumping up a little bit. And this one probably caught a lot of people off guard. We ended up dropping, Bitcoin ended up dropping 13% for this whole run here down into today, where we continue our little price action. Solana, I thought we were going to see a little bounce here myself, so I bought into Solana here, and luckily I bought into it right here, and luckily the market gave me a chance to give it back, so I went ahead and sold it back and got out. But I bought right here at the bottom thinking that we were going to have a rebound here, and or maybe it was right in here. I bought right in here thinking we were going to bounce right here. Then we had another little drop, and then fortunately it came back and I sold right there. So that's what it was. So I guess that was about somewhere around, 7, 8 o'clock last night. It looked like I thought maybe we were done and we were going to have a little bounce right here, but we had that one more leg. So the market gave me an opportunity to get out, and I did. So all I lost were transaction fees there, and I decided to sit it out, which I'm going to sit it out the rest of the weekend. Still looking for that intermediate bounce, a little bigger than what we had here. I kind of felt like this wasn't enough. I felt like we needed another leg down. So after we hit right in this area and paused, I thought we were going to get a bounce there. It looked like we were going to get a little bounce here, but we're still seeing weakness, and the stock market showed a lot of weakness today. So what is going on, and what can we expect moving forward? So let's take a look at a couple of things back on the Bitcoin chart. And we'll go back to the daily here. So again, I'm not a technical analyst. I'm not a chartist. I'm a macro investor. I invest in businesses, companies, real estate, cryptos. So I look at charts and patterns and price action, because this is a very different time in the market now with the market participants, the liquidity that's been pumped into the market by the Fed since the pandemic. It's just been straight up in pretty much all markets. This is Bitcoin. There's the Dow. There's the NASDAQ, there's the S&P. And, that free, easy monetary policy is what has jacked markets up to the point that we're seeing now. And it's also why we are seeing declines in the markets right now. So anyways, if you've been following the channel at all, you know that I've been looking at the death cross and just found an interesting comparison here, where we had our peak. We have the exact number of days from each peak here in this current cycle. Just looking at this current cycle, the exact number of days from the peak to the point of the death cross happening. This is the 50 and 200 simple moving average death cross. There's exponential moving averages, a couple of different death crosses that people look at, but I'm just looking at the 50 and the 200. And it's interesting to me, and it was interesting to me, that there was the exact same amount of days from the peak to the cross. So I was kind of looking at that and saying, well, what was the point from the cross to the bottom? And I took that measurement and measured it out over here. And that put us around February 14th of this year. So if we take the exact number of days from this cross to the bottom and extended it out over here, that put us in the February 14 timeframe. And then I looked at the drop, which I think was about 13% or so from the point of the death cross to the bottom, somewhere around 13%. And then I extracted that from where it happened over here, and we came up with about 36 to 37,000, where Bitcoin is looking to bottom on the 14th. If this is any kind of an algorithm that's been programmed into the institutions based off of technicals that they're trading. And if you see the markets today, we got a bounce with the S&P, or it was either S&P, NASDAQ, I can't remember. It might have been the S&P right at the 200-day moving average. There was a little bit of a bounce, and then it broke right back through it again. If we look for that moving average and we put it in here, these are some things just to kind of keep an eye on, because the moving averages, all of these things are lagging indicators, as a lot of people really know. Moving averages don't really tell you more or a whole lot. It tells you where price has been, right? Because it's an average. So we had a little bit of a bounce on the 200-day moving average on the S&P, NASDAQ, I believe bounced, and the Dow Jones, but they are through it now. So that is a key technical breakdown for the markets. That's a major, major technical indicator for the market, showing structural support has broken on traditional markets. Bitcoin has been well below the 200-day moving average for a while. So anyways, back to this. So that leaves us with a couple of weeks for Bitcoin to kind of meander around and find its bottom and where this price action is. The interesting thing is we've got a lot of market structure in Bitcoin right here around that 40,000 level. We are currently at 37 and change right now. We've broken through that $40,000 level. So this could just be, it could just continue down from here, and this little sideways crawl that we're looking for over the next few weeks may or may not happen. It's hard to say right now with what's going on. There's starting to be a little bit more sense of urgency about this price action out there, but this level right here, this $36,000, $37,000 level is a good place to get some sort of a relief rally, a relief bounce before any further continuation. We've had a couple of little bounces along the way, nothing significant. I mean, this one was 13% bounce, so that's not too bad, but generally you're going to want to see a little bit bigger of a bounce before we continue down. The fact that we haven't had one is not a good sign. This continual sell-off here is not a good sign. Generally, you're going to want to have a couple of nice little bounces along the way like we had here when we were doing the initial drop back in the spring, early summer. I mean, we were seeing 20, 30% bounces. So we haven't had that. So this could very well just continue right on through. It's really hard to say. Nobody really knows. But if it does follow that pattern that we were looking at, we could continue sideways down to a 36, 37, and then get that retrace that everybody's looking for into that 50 to 60,000 range, which depending on where this lands would be the Fibonacci retracement that everybody's looking for. That would ultimately, if it landed somewhere around 36 to 37, then that 618 to 702 puts you in the 50 to 60, 57 to $60,000 range for a retracement that Bitcoin typically does. And pretty much every cycle, Bitcoin has shown a retracement back to that level. If we take the initial one that we had in the summer, you can kind of see, depending on where you call the bottom there, that close or a couple of the wicks, it was right in between 618 and 702 before it rejected, started heading down, and the whales jumped in and saved the day to continue the pattern. This arguably, without the whales jumping in, this would have been over and started to continue down a little bit more, but there was enough buying activity here and enough interest that they could go for one more run. This whole area here could have just been a little bit of an accumulation to then distribute up here, and the distribution is kind of continuing as we go down. Some people think this might be a little bit of accumulation, but this is more still just selling, straight up selling, not a whole lot of buying pressure there because prices are not rebounding enough. And the whales are not propping the market back up, nor is the Fed. The liquidity just isn't there, it's gone. So we're going to look at a couple of interesting things as well. And we're going to talk about the Fed and the bigger macro picture and why interest rates matter, why Fed policy matters, and what can we expect and when in terms of what's happening. We know Powell's going to speak next week. And when it comes to Fed policy, that's more of a sell the rumor, buy the news event. And we're going to take a look at that in a minute. But right now we've got a couple of options. We could get a little relief bounce here at some point. I don't know. The weekends are tricky. It's hard to say. The Asian session tonight could continue this just like we saw last night. So right now I'm expecting more downside. I don't know how much more, but if you look at what happened last night, that was a pretty good little drop. We've had a big down day today, so you might get a little relief bounce. It's really hard to say, but this area is a big structural support in the market. Our next area of structural support is going to be in this 30,000 level, and if we break that, then there's just no telling where we could go from there. But we've got a lot to get through right here. We could potentially test this area for a week or two, which would lead into the theory of the February 14th bottom before we get a retrace and then ultimately retest the lows again and go into a more of a longer term consolidation, bear market, crypto winter, whatever you want to call it. At the end of the day, it's just a consolidation like you see here before you get these run ups. So the thing to watch out for are the altcoins, because a lot of those, we're looking for a retrace Bitcoin, for Bitcoin to retrace to that level. And typically that's when your altcoins would run, is during that retracement well after Bitcoin is topped. But some of these you have to really be careful with, because a lot of them, Ethereum's got a lot of structural support there, but Solana, for instance, is just kind of hanging over a cliff. There's no support for Solana until you get down into that $72 to $74 level. And that's what I was worried about. I was looking for a little bounce, but I didn't want to get caught because there's no support below it. Of course, you can just set a stop to catch you. But, Solana could just be in a free fall with very little support or anything to stop it. And if you look at where it came from before this run up, I mean, Solana was in the $20, $30, $40 range. Back here, it was in change. It was in, pennies to, into a dollar. And then 30 to 40 cents. I mean, not a dollar, but 30 to 40 cent range over here before it started running up. Or not 30 to 40 cents. I'm sorry. It's $8. So it was changed back in here, got up into $8 to $10, $30 to $40 here. And then it had a run up to $267. Now we're back down to 116. So we could very well see $60 to $70 on Solana potentially before this is all over and done. Axie, or Avalanche, same kind of thing. If you see where it came from, $11 down here, running all the way up to 150. There's a lot of support here for Avalanche. So Avalanche might be able to hold on, but you got to look at where we came from before these runs began. Same thing with Aave, crypto.com coin. We looked at that the other day. This one, there's not a whole lot of history in it to be able to tell what it's going to do. Cardano has gone on its run and come back down and completely retraced everything. And one of the interesting coins today, the only thing that was really green today was this Suku coin, SUKU coin. And this one's just been having fun. So this one went on 100 and something % run, retraced completely, and now it just popped again. So this one is one of those ones, if you are in the gambling mode and you know how to play this thing, it's already gone up 251% again from where it dropped to today after it went up 100 and, well, it was another 200 and something % there. But today alone was 180 something %, then it dropped all the way back and it's running back up again. This one's done it a couple of times, but this is today right here. If you look at it on the hourly, it ran all the way up a couple 100% today, retraced completely. So this one's been kind of crazy. That's a heck of a candle for the day today. So let's get back to Bitcoin, the markets, and the Fed. So where are we with Fed policy right now? So the Fed has sent the flag up the flagpole. They've given warning to the markets, take your profits. We're going to raise interest rates. We're going to tighten monetary policy. The fun's over. So what are the Fed's choices? So they raise interest rates. They know it's going to affect markets. They know that inflation is real. And the only way to fight inflation is to raise interest rates and pull the easy money out of the market and tighten monetary policy a little bit. That's the only option that the Fed has to rein in inflation. So their choices are tank the markets, control inflation a little bit, or let inflation run and let the markets run a little bit. So the markets are basically testing the Fed's resolve right now. They're waiting to see what Powell's going to say. The markets are going to throw as much of a fit as they can before Powell speaks to try to influence his decision and what he's going to indicate in terms of the policy that they're going to project moving forward. So, the Fed can raise rates to try to control inflation a little bit. That's going to affect markets. They can't really drop interest rates if markets get out of control. They can't really drop interest rates. So their only choice moving forward, if the markets do start to tank, the only rescue options that the Fed has is to just signal that they're not going to raise rates and that they're going to continue their asset purchase program and the types of assets that they're going to be purchasing, bonds, commercial paper, potentially stocks. When the market was collapsing back in March of 2020, they indicated that they would come in and purchase stocks if they had to keep the markets from collapsing. The Fed cannot let the markets collapse. Why? Well, because everybody's retirement is at stake. A lot of the people in Washington, D.C., a lot of the Fed board members, and a lot of the general public at large, a lot of retirees, if they let the real estate market collapse, if they let stock market collapse, and if they let commercial markets collapse, commercial paper markets collapse, that's going to wipe out a lot of wealth of a lot of people. So the Fed's in a tight spot right now. Do you let inflation run and hurt the general population? Because it is fundamentally changing behavior. And if inflation gets too far out of control, that's when people will start to protest, and you will see real civil unrest because it's affecting people's lives. It's affecting the choices that people have when prices are where they are right now. It changes people's behavior and people's lifestyle. So the Fed's in a tight spot. They have to bring everything in for a soft landing. The question is, can they land softly, or is it going to be a crash landing in terms of the markets? Can they unwind what they've been doing since basically 2008? So let's take a look at a couple of key dates here to bring this back into perspective. So the last time the Fed raised rates was in 2018, and we're going to take a look at the markets and what happened. They indicated that they were going to be raising rates in March of 2018. So let's go look at what happened in March of 2018 in the markets. So back there, crypto and the traditional markets weren't, as in lockstep as they are now, but they were still joined at the hip pretty much. So let's go back to March of 2018, and this is the Dow Jones. And here is March of 2018 is right here. Right in this area right here. Yeah, so there's March of 2018, February, March, April, right in this area here. March of 2018 is actually right there. So the Fed announces we're going to start tapering, and the markets, and they knew it was coming. Here's January of 2018. So the markets dropped January of 2018, basically 12%. Fed says in March, as the markets are kind of playing around, that monetary policy is going to change. We're tightening. We're going to rein control back in. Markets drop 8%. And then, there were a couple of little interest rate hikes all the way along until they actually hiked rates again in December of 2018. So what happened? We reached a peak in October of 2018. The markets peaked. They knew, the Fed came out and said, we're going to change monetary policy because we had this huge run up all the way through from 2009, basically nonstop after the bottom in 2009. Easy monetary policy all the way up. We had a couple little hiccups along the way, but everything was great until December of 2018 when they raised rates. What happened? Market bottom. Remember I said, sell the rumor, buy the news on this event. The market bottomed in December of 2018 when the Fed actually raised the rates. When did the sell-off start? In that January to March timeframe when the Fed started talking about raising rates. So this big sell-off in January, behind the scenes conversations of buddies, hey, we're going to be reining in interest policy and reining in liquidity, take your chips off the table. So that's when it started. And then I think the Fed really got into action with that December, when everybody knew the big rate cut was coming in December. That's when you saw the big market drop in October, November, December. The markets were telling the Fed, hey, you can't do this. So what did Powell do? Reversed course and said, we're going to lower rates again. So bam, off to the races again until March of 2020, when there was just nothing they can do. Markets dropped. NASDAQ kind of followed suit. There's March of 2020. This is back in October, November, December, bottomed again, December of 2018, when the Fed raised rates, everything was fine again till March. And S&P kind of followed suit as well. Same thing. There's your 2018 bottom. There is your March 2018 announcement right in here. Yeah, back in here, same thing. And then kind of went steady uphill for the year till the serious rate cuts came, and bam, we bottomed in December. Then we saw March of 2020. So what happened in March of 2020? Fed came out and said, we are going to supply all of the liquidity. We're reducing interest rates. We're going to pump liquidity in the markets. We will buy stock if we need to. Boom, everything is straight up. So that's the NASDAQ or S&P, there's NASDAQ, and there's the Dow, all from March 2020 straight on. So what happens now? Markets in the economy brace as the Federal Reserve's first rate hike could come in 2 months. So sell the rumor, buy the news. So can we expect a market bottom in a couple of months? We've been targeting that February bottom for Bitcoin and for the markets. So markets right now are down about 7% on the Dow. S&P, this is NASDAQ. NASDAQ's down 13%. So we are in correction territory on the NASDAQ till you get past 10%, and that's not serious correction territory. And the S&P is down 8%. So we're getting close to correction territory for the Dow, for the S&P. NASDAQ is approaching. Once we get into the 20s, then we're in serious correction territory, and we'll see how low they're going to let this go before they jump back in. Last time was back here, and they let it go 20%. So the Fed jumped back in, reversed course, and said, we can't raise interest rates. We can't tighten monetary policy. The economy is not as strong as we thought it was. We're going to have to reverse course. And that was right back there in December of 2018. January, it was straight uphill until the March pandemic. What they do, they jump back in, propped everything up again. So now they're pulling the plug. So how does this all look for Bitcoin? So let's go back and look at Bitcoin in the time frame. So here is December of 2018. Fed cuts interest rates. The Fed decides they're going to cut interest rates December of 2020. I mean, this is 2018, not 2020. Yeah, but anyways, 2018. Yeah, the Fed wants to cut interest rates in 2018. And December of 2018, here you go. What happens? Bitcoin starts dropping. But remember, the markets had already bottomed in December of 2018. That's when Bitcoin peaked. Was let's zoom in here a little bit more. So, your last green day was the 16th of December, 2017. And then it started dropping all the way through into January of 2018. So December of 2018 comes in right along here. So this is where you're coming into that December 2018 bottom, where the markets bottom and Bitcoin bottoms right along with them in December of 2018. This was 2017. I'm sorry. This was November. The peak was November, December of 2017. So the Fed had not started talking about the taper and raising interest rates and things like that. This is when Bitcoin peaked the first time in 2017. And then we saw a drop after that peak, normal Bitcoin cycles of about 69, 70%, right? And we see that retrace and then drop. We see another retrace, drop. And we're looking for this retrace right now and where we're at so that the altcoins can run. After Bitcoin top, the altcoins were right behind it, lagged it by a couple of months. And then we continued into this longer consolidation, bear market, crypto winter, whatever you want to call it. It's just basically consolidation with peaks and valleys. Good money to be made if you're swing trading. If you're holding, you're holding. But what's interesting is what we talked about was right back in here, March of 2018 is when the Fed said, hey, we're going to start raising interest rates. What happened? Bitcoin drops just on the talk of interest rates being raised in March of 2018. That's when Bitcoin dropped. And how much did it drop right there? It dropped 44%. So where are we at right here? Powell says over here, we're going to start dropping. We're going to start raising interest rates. Policy is going to change. And where are we at? About 45%. So we've dropped 45%, same amount that we dropped back here when Powell said, we're going to start raising interest rates. And then ultimately when it happened was December of 2018. And from that point where it was first announced that, see March right here. So when it was first announced from March to the bottom, that was a total of 73%. And if we look at that from where we're at right now, peak down to 73% leaves us at that $17,000 to $18,000 range. Now, I'm not saying we're going to get there, but initially when this was happening, that was a realistic target. Right now, I'm not so sure we'll make it through this area. There was a lot of support, a lot of people stepping in that $30,000 range. So it wasn't able to break through there and get through that level there before we rebounded. I think there's a lot of interest, a lot of appetite for Bitcoin at 30,000. So I'm not sure we're going to initially break through that range before you have a retest or a retrace altcoin season, and then ultimately your final run into a longer consolidation. A lot of people believe it can get below there and it will get below there. There's a lot of people that said we would not see 40,000 again. We broke through that today pretty handily. We're at 37,247 right now. So those are the things that I'm watching, I'm looking at. As we go into the weekend, it's all on the Fed right now. The interest rate policy is making a difference. Bitcoin is following the markets. You can see in the past, it tracked along well when the Fed announced. We saw sell-off, and when the Fed actually acted, we saw a bottom. So could we see the same thing this time? We don't know. We'll just have to watch it and see. But those are the things I'm looking at to kind of help me make decisions, kind of help me track bottoms. And it all kind of lines up. If the Fed's going to make the actual interest rate cut here in, the February timeframe or March timeframe, then that lines up with that death cross kind of days, of a bottom here over the next couple of weeks in that 36 to 37,000 range. But we'll see where things go. It could go a little bit lower and come back up and just bounce around and stabilize and then go up from there. So we'll just have to wait and see. So those are the things I'm looking at today. And if anything changes, I will bring an update over the weekend, and we'll talk to you on the next video.